I'll give y'all a few moments to come on the live. We're gonna give y'all a few moments to come on the live. And as usual, please tag, like, and share this post. Share with your neighbors, share with your friends, your church members, your family, your cousins, your aunties, all of that.
Everyone,
We are
everybody.
going to give you some great information about the real estate market right now. So please tag, like, and share. Let me share it. Since I'm asking you guys to share it, let me share it from my page. So
So you're having a wonderful Friday, Trish?
yes, I am. How's your Friday going?
It's going well. It's going
I
well.
feel like time is just like passing by. Like
It
we're
is.
already almost at noon for today.
Absolutely.
So, oh, there I am. Let me share it. Tony, you sharing?
Well, I don't see a share button.
Go to the Trish Sales Atlanta page, and you'll be able to see us. Oh, you don't have your iPad.
Right.
Gotcha.
Yeah.
Yeah, I'm working with like three devices. We're live on Instagram too. They cannot see you, but they can hear you.
Okay.
For a couple of
Good deal.
to come in there as well, and we'll go ahead and get started.
Okay.
And I can see the comments, so I'll fill the questions for you
Okay.
in the comment section. And I'm gonna share this in some of these groups, and we'll be ready to get started.
Absolutely.
And we'll start off with our mortgage update, and then we'll kind of talk about how that relates to the real estate market and folks buying a home, and also for sellers. The benefit of when you actually pre-approve buyers, the way that you do it, how that could be of a benefit to them, and why they should go ahead and put their homes on the market.
Okay.
We can talk about that as well. And I'm still sharing. I see we got one person on. And one more. I try to hit my groups as well. I have a past client group, so it's like a private group. So that's why
Right.
clients who they sold, purchased a home with me, or they sold a home, so they have their own special group that I communicate with them with. And then my other group, and it's kind of condensed where they're following my page, but they're a little bit more interactive.
Mm-hmm.
So I share it there too. So hey, I'm trying to see who's on. If you're on the live, say hello in the comment section. And thank you for hello and thank you for coming to our live today. Good morning, Chandra. Chandra is on the line, Tony.
Hi, Chandra.
So she's saying good morning.
Good morning. Good morning to you.
And we'll give them about 30 more seconds. We are on day 42 of our quarantine.
Isn't that something?
Ain't that something? Or
7 weeks.
hey,
Mm.
Anjali. Angelique Merritt, she is also online. Tony, she is a prospective home buyer as well. She is definitely
Okay.
looking at purchasing towards the end of the year. I've been working with her for a while, just trying
Okay.
to get her going.
Absolutely.
So I did ask her to attend today, and she texted me and said, "Trish, I'm going to be there," and she's here.
Okay.
So she is on the fast track to becoming a home owner. And we'll give them about 15 more seconds before we go ahead and get started so we can enjoy this beautiful sunshine.
Yes.
Yeah. And I'll give a brief introduction and then you can give one, Tony.
Okay.
All right, good morning, everybody. Thank you so much for tuning in to our Facebook Live, our virtual house market Q&A session with Tony Brown with Synovus Bank. For those of you who don't know me, usually folks that are liking my page, they've had some type of interaction with me, but my name is Trish Myrick, and I am a realtor here in Atlanta, Georgia. I have been in the market. This is my 12th year. This is my 12th year in the real estate business, and I'm appreciative to be still in business for you. I work with sellers, buyers, investors. I also work with landlords who would like to lease their homes. So those are just a few of the things that I do and the services that I give as a realtor. I am from Atlanta, grew up here, went to Atlanta Public School, so I'm as Atlanta as you can get.
All right.
And so I always love saying that because most of the nook and crannies around here, the sides of towns and the areas, pretty well versed in since, I've been here all my life. I won't tell you my age though. Had to do a shameless plug. So Tony, I'm gonna give it over to you so that you can introduce yourself, and our followers can know who you are.
Wonderful, wonderful. Thank you, Trish. And again, I'm Tony Brown. I'm with Synovus, and I've been in the business for over 22 years as a loan officer. I started with Home Bank back in the day. So if anyone knows Home Bank, they really set their loan officers out, trained them, and we hit the market pretty good. So they still say that you can always tell a home banker out there. So I wear that with pride and honor myself, actually.
Awesome.
So I've been around for a while. Know a couple of things as far as the different products available, different ways to get buyers into a home. So I try to do my best every time to do just that. I take a first time home buyer into consideration just as much as a move up buyer or investor. Everybody's case is different, but I do pay close attention to that first time home buyer and making sure that they understand everything that goes on in the process. So that I wear that with pride. I take pride in that.
That
So
is awesome.
yes, absolutely. But as far as the market, I'll jump right into a market update if that's okay.
Okay.
With the COVID-19 and different changes that have been coming on, a lot of investors have made adjustments to their criteria. They've tightened some things down as when it comes to credit scores and loan to value, and so they're just trying to monitor what's going on. Obviously, people have lost some jobs along the way, been laid off, some furloughs. So they want to make sure that they're doing pretty good things when it comes to ensuring that that buyer is going to be able to take on that mortgage for the history and that sort of thing. I think that it'll loosen up as time goes on. I think as we move along in this COVID-19, different things we're going to see that changes are going to be made along the way. But just be mindful that when you see those changes right now, it's just to mitigate whatever kind of risk that might be there that's going on in the market right now. It doesn't necessarily make it tougher to get the loan through to closing because we're still closing loans.
Mm.
We're still closings are happening every day. Closing attorneys are doing their best to actually make sure that the buyers are going to closing and signing off everything great. Real estate agents like Trish are making sure that buyers can still see properties and get the right contract. Loan officers are working good to make sure you can get pre-qualified. So things are still being done in this current market. Okay, so I want to make sure that you realize that you can still buy a house. Okay, there are still programs out there available for down payment assistance if you need it. There's a lot of opportunity still out there. So
Well, that is awesome to hear, and I can attest with Tony as well that we are still closing. We are still closing.
yeah,
The real estate business is still going on. Our closings do look a little different now because of COVID-19. We got curbside closing,
Right.
closing in our cars, just to maintain social distancing,
Hmm.
and just trying to stay safe and healthy. And I hope everybody out there, are maintaining their social distancing requirements, staying 6 feet apart from one another, and wearing
Hmm.
a mask. That's something that you will see me. If you do business with me, I will have on a mask to protect me and you. So, just as we move forward, like I said, this is day 42 of quarantine. Hey, Mr. McFly on Instagram, thank you so much for tuning in. He says he needed to hear this for motivation, Tony. So
Okay, good deal.
chiming in. But as we continue to move forward in the market, one of the reasons why I wanted to kind of clear the air with the elephant in the room is because a lot of people are a little apprehensive about the market, not knowing whether to place their homes on the market or not. And I just encourage them. It's still a seller's market. Like we're still writing multiple offers on homes, so we need some inventory, if you will. And one of the benefits that I always tell my sellers about working with a lender as yourself, y'all. So I met Tony actually through a client, and the client was my cousin. And she was ranting and raving about how great he was. And she closed on her home. And through the transaction, he was phenomenal. He was responsive. He communicated with me via email, text, call, and that's something in the business that as a realtor I can appreciate. What I do not, what kind of just pains me is just like if my client asks me a question and they want to get it answered. And so when you reach out to the person who has to answer, because my job is the facilitator, the negotiator, the liaison,
Yes.
to make sure that, the questions are answered. But when I tell you, when I call Tony, he picks up his phone. When I text him, he responds. When he emails me, when I email him, he emails me back. I mean, it's phenomenal. And so she was absolutely right. So coming from a client perspective, it has been such a joy to work with him. In addition to the wealth of knowledge that he has, on really on both sides to assist buyers and sellers. So, as he said, they have some, restrictions, and they've made adjustments due to COVID-19, but we do project to see, a very great real estate season. For those of
Hmm.
you who are on and you have any questions, please put your questions in the comment screen, so that way we can ask Tony just any questions that you may have about the bid, about getting a mortgage, just anything. No, no stone unturned, no dumb questions, because every question is a good question. So that we can help you navigate the market. That's why we got on here today to kind of dispel the myth, anything that you have heard about what's going on with the real estate market. I shouldn't list my house right now. Well, I'm going to go ahead and tell you that you should, because I know I have like probably 9 buyers that are trying to get themselves prepared to hit, and to get prepared to hit the market. But if you're on the fence, we don't have any inventory. So if you've been thinking about it, let's chat. And one thing that Tony does, Tony, talk about how you do like the credit approvals for the buyers, and how that translates to the sellers.
Okay, so when I get a buyer, the first thing, of course, that I'm going to do, I want to do an online application, or I can get the information from them over the phone. My preferred route is to do an online application. So a person will go to my website at synovus.com/Tony Brown. And there they would have all my contact information, a little bio of myself, and you apply online. That way, you actually put the information in at your leisure. In the evening while you're at work, that sort of thing, and it comes right to me directly, and I'm able to follow back up with you. If you're not able to get access to, and it's even user friendly, you can go you do it from your phone. So, but if you prefer to get the information over the phone, I'm also available to do that as well. But the key thing there is me getting your information so I can do that initial credit pool. So I'm going to look at your credit. I'm going to analyze the income that you're either going to put in the system or verbally give me. And between those two things, honestly, your credit and your income, I can do what's called an initial pre qualification. All right. So when you get a pre-qualification, it's pretty much limited information that you have to get to go on, but at least I'll know what your credit scores are. I'll know what kind of programs available for you to for me to kind of steer you in, and then see if everything looks good debt to income ratio wise. Your debt to income ratio is going to consist of the monthly payments, the minimum monthly payments that show up on your credit report. So not like if you have like a storage bill or you have some your utilities, those things don't go into your debt to income ratio. It's just going to be the minimum monthly payments that show on the credit report. So I match that with your gross income. Okay, so not your net income, but your gross income, and that's what will like actually let me know where you fit as far as your debt to income ratios. From that point, I have a general idea of how a person may look to qualify,
Mhm.
but I don't leave it at just that. All right, I'm going to then request items from you to be sent to me. Um, Namely, you're going to be your pay stubs, last 30 days of pay stubs. So if you get paid every 2 weeks, that's your last two pay stubs. If you get paid every 4 weeks or weekly, that's your last four pay stubs. If you get paid once a month, it's your last one, monthly pay stub. So I get 30 days of pay stubs. I'm going to get your 2 years of W-2 forms. So at this point, that's 2019 and 2018. Not all loans will require me to get tax returns. Some loans do, some loans don't. So the loans that would may require me to get tax returns, then I'm going to have to get your last 2 years of filed tax returns, and I'll let you know if I would need that or not in our conversation. And then I'll need your last 2 months bank statements, all pages to the last 2 months bank statements, because we want to know and see where the funds are for closing. All right. That is key because the segue, Trish, when you asked me about the seller and how that relates to that seller and ensuring that I have a buyer that's good to actually write a contract on their home. I'm not just doing a pre-qualification where I've seen a credit report and they verbally gave me information of their income or what have you. No, I've seen these documents. Okay, I've actually verified what the income is, and if it's a loan that requires tax returns, we can get into another conversation about this, but you could have write-offs and things of that nature
Mhm.
on your tax returns that could prohibit you from qualifying if I had to use certain things on tax returns. And so I've seen it a lot of times where a person's tax returns may show a loss of income for side business, Mary Kay, Uber, that sort of thing. And unfortunately, sometimes people don't even know that their tax person may have done this for them as a benefit, but it affects them negatively when it comes to qualifying. So we got to be careful about that. Like I said, that could be another whole conversation when it comes to like analyzing tax returns, right? But the main gist of that is I do get tax returns to make sure there's no income that's going to a negative income that's going to affect my qualification. Okay, and that's going to translate over into eventually getting you an actual approval with an underwriter. All right. The question always comes up: what's the difference between pre-qualification and pre-approval? All right. You can probably have 10 loan officers and ask that same question. I won't say you get the same answer every time. I can tell you for me, any pre means prior to, right? So prior to underwriting,
Mhm.
all right? And that means that even with those income documents and things of that nature, if I've seen it, that's a great indicator that you're going to be able to get officially approved by an underwriter. I can get all of that in one day. All right. I can have a buyer really ready to go. And if I'm going to give a pre-qualification letter to a realtor or and a buyer, then it's pretty solid, right? But that still means that you have to take that information and get it into the underwriting process to be officially underwritten by an underwriter. All right.
Right.
And once you're officially underwritten, then now you have a conditional loan approval. All right. It's not pre anything. It's a conditional loan approval, and that's pretty solid as well. Some files we can get a conditional loan approval prior to looking, but I've been around for a while. If I've seen your documents, I know that I can give you the license to actually look based on me seeing your documents. You don't necessarily have to wait for an underwritten condition. I can go ahead and get that pre-qualification going. But to answer your question to those sellers, I've actually seen all of the documentation that I need so that seller can be sure that I will be closing on that buyer's loan, if I've seen all of that information.
That is awesome, and I can definitely appreciate that confidence. And just working with sellers that makes or breaks a deal and makes a determination on whether they're going to accept the offer or not. Sellers are more comfortable with accepting the offers that do have a conditional, loan approval on them. So buyers,
Absolutely.
that's why I encourage you to, go through the process, submit all of your documents, please, and thank you. So that way, you have a strong offer. I'm gonna put my Midas touch on it, but I need you to put your Midas touch on it with your lender, so that way you can come to the table and negotiate for the house that you really want. Tony, we have a question from Takesha. She says, "I have questions about how the home building process works when using VA loans." She's working on, she just actually moved here from Texas, helped her secure a rental, and she wants to build a home, but she has a VA loan. She is part of our military personnel. We thank her for serving our country. Um,
Okay. Yeah, absolutely.
yeah, so can you give us some information about the VA loan and the home building process?
Absolutely. So I'm prior military myself. So thank you. I did 9 years National Guard, and I have a VA loan on my primary residence. So it's a great loan. I tell anyone VA loan is the best loan for anyone who qualifies to do. All right. It's 100% financing. There's no mortgage insurance. The interest rates are pretty low. They have a little bit more lenient guidelines as far as debt to income ratio. So it really helps out. Now, when it comes to new construction and buying a new construction home with VA, so let's quantify that. So with new construction, you're either going to have a builder that has a community and they're actually financing their own construction, end of the construction. The buyer may go under contract, and then and now the house is being built for 3, 4, 5, 6 months, or whatever it is. The builder has their own line of credit, so at the end they're just going to close on the loan and well, be finished, and the buyer closes on the loan to where they can use the VA financing for that type of a loan at the end. That's okay for VA. You can do that. You can use your VA loan in that particular scenario. However, the other type of new construction or building a home is if you were to find some land and maybe you own the land or you're going to buy the land and now you want to do a custom build, with the builder, and that builder does not have their own lines of credit. They want you, the buyer, to have a construction to perm loan to where the lender is now going to give construction money along the way to that builder. Unfortunately, you're not able to use a VA loan for construction to perm. Okay, the VA loan is the end loan once everything is all the builder's done all the financing, and now you can do your VA 100% loan at the end. The construction to perm loan, it requires an initial investment on the front end, at least a 10% investment in some transactions, and other times it may be as much as 20% that the buyer has to put up front on a construction to perm loan transaction. So therefore, the VA does not allow 100%. There's no VA 100% financing construction to perm loan. So I want to make sure that you knew that the difference between the type of building a home. So if the builder's able to have their own money and it's in a, even if it's not in a community, you may have some builders that are custom home builders that still are okay with having their own financing to build, that home. That's okay as well. That's kind of rare, with in that scenario, but it could be. But if it's in a community type, building a home, then you should be fine. You would be fine to do your VA loan at the end of that construction.
So, Takesha is asking another question: is how do we find the proper builders that are VA approved?
Well, if you with the VA with the builders, if you have a new home construction that is able to do government financing, then they're able to do FHA or VA, loans. As far they've done the particular paperwork on the front end to actually be able to be approved builder for FHA or VA, funding in that regard. But there again, if it's a new home like custom build, more than likely that builder has not done any of those items particularly needed for that, because they may not have that happen. They're not really going to have any VA loans on a construction or perm. So, but if you have a community that has done, the builder has done their due diligence on that, then you'll know that just by going in and asking them, are they eligible for VA or FHA financing. That's how you pretty much find it. As far as a list of those, honestly, I'm not sure I can answer the question if there's a quote unquote list of builders or communities that have already done that due diligence. You have to kind of ask.
Right, and just to chime in, Keisha, typically new like new construction and builders who have done their due diligence and they have their lines of credit, and that's why they kind of have like preferred lenders and they don't like to use other lenders. But I've gone to the table and upset all of that before, but it's a whole
Mm-hmm.
other thing.
Mm-hmm.
But that's why they established that. And usually with the new construction, FHA and VA is pretty easy because they're going to meet all of the requirements up front. With VA and FHA, they have certain requirements with the roof, the condition of the house, and everything that has to be met by their appraisal department in order for them to originate the loan. Well, when you're getting something that is brand new, it is a lot easier for them, especially if they have a line of credit with a reputable bank to be able to originate government loans, basically. And FHA and VA falls into that category.
That's right.
So thank you so much for your question and
Thank you. Thank you for your question.
with VA financing. And let me scroll through. Hi, Don Malloy on Instagram. Thank you so much for joining our House to Market Mortgage Q&A session. If you have any questions, please drop them in the comments on Instagram, and I will ask our loan officer, Tony Brown, any questions that you may have. Angelique has a question. She's saying, how far in advance? I'm waiting for her to type the rest of it. How far in advance? Or maybe it cut it off.
She'll come back.
We'll come back. That was some good stuff. So Tony, oh hold on. She says sorry. She says, how far in advance would you suggest doing a pre-qualification application, Tony? And to add on to that, when you give your pre-approvals, how long do you give until they expire?
Okay, great question. So, I think as far as how far in advance, I think it's always a good time to look now if you have an interest for any time in the future of purchasing a home, whether that time is 30 days out, 3 months out, 6 months out, or a year out. You still have to get a good picture of what you look like, even now, if you're on path, if there's things that you need to do in order to get, on your way. All right. I'm going to be able to look at your credit score, like I mentioned before. I'm going to look at your debt to income ratio. If you don't know what those things look like, regardless if you're looking 6 months out or a year, it's good to know now if you're in position. And I will tell you this, a lot of times people may say, well, I don't think I'm going to be ready for an period of time. And I look at their credit report and I look at their income and debt ratio, and guess what? They can buy now. They wouldn't have even known that they were in that position had they not taken the step to have a loan officer look at it. Okay, so it only takes us 30 days to get a loan, or less in some cases, from start to finish. Okay, so if I pull a person's credit report today, May 1st, and that person is able to buy a house, they can be in their home by the end of May, literally. Okay. If they go out, if I pull a person's credit report today, get their income documents, and they go out to start to look for a home this weekend, they find a home this weekend, I can be given a contract on Monday and we can close it by the end of May. So it does not take us long at all uh, to get the process taken care of. So the answer to me is how far in advance, you know, I say now is just as good a time as any. You want to take a look at it, and if you're able to buy and you're just not ready, maybe you're gonna wait a little bit. Maybe your lease doesn't end for a certain time period. I think Trish could actually help you with that because sometimes you can break your lease, and for certain reasons, and you don't have to wait for that long of a time. Um, so I say go ahead and start now. Is my answer to that. And then once we actually get you pre-qualified, the pre-qualification doesn't necessarily expire.
Okay.
Certain documents expire. Okay, so the credit reports are good for either 90 days or 120 days, depending on the type of loan that I would be doing. Some loans, the credit report is good for, like an FHA loan, the credit report is good for 120 days. Some of my conventional loans, the credit report is good for 90 days. So if you've gone that 90 days, let's say, and I don't have a contract or you're not, written contract, then I need to pull an updated credit report if you're still looking and just haven't found that home. But if nothing has changed, if your income hasn't decreased, if your debts have not increased, if the credit scores have not decreased, then you're still in a pre-qualifiable standpoint. I just had to update my documents.
Okay.
And so, with that being said, I would definitely say if you ever get into the process, or once you get into the process and you're pre-qualified, keep everything the same. Keep your credit the same. Keep your debts. Don't apply for any new debts. Just keep everything going the way it is, and you should be fine.
So that means, my friends and my Trish Sales Atlanta family, don't go out there and be applying for a Macy's card and trying to get an auto loan and all that good stuff. Because from my understanding, our lenders get a little ding ding when you start going to apply for new credit. They are alerted if you are, potentially purchasing a home. So during this time where you're getting pre-qualified to purchase a home, that means that applying for other credit and all of that, because that affects your debt to income ratio. So we don't want to do that. We want
That's right.
we want to keep our eye on the prize of selling, of purchasing a home. And we don't want to adversely affect ourselves because Macy's having they got 25% off right now, y'all. But don't do it. Do not
That's right.
up for that Macy's card, y'all. And they're doing like a whole Mother's Day sale, but don't fall prey, y'all. Be strong.
Mm-hmm.
Be strong.
Mm-hmm.
It's
Mm-hmm.
trying to purchase a home because all of that is included in your debt to income ratio. So
Trish, I have whenever I do send out my list of items needed to the buyer after I've taken, looked at the initial credit report, I often send in a what I call the Ten Commandments.
yeah,
Okay, and so and it's the Ten Commandments when applying for a mortgage loan. I think there's a great segue here for me to tell the people on the line
please.
what those Ten Commandments are. Okay, and it's meant to be a little funny, but it's real because of what is said here. Okay, because each Ten Commandment starts out with "Thou shalt not." All right,
Yeah.
so okay, so here we go. The Ten Commandments of when applying for a mortgage loan. Thou shalt not change jobs, become self employed, or quit your job. Now, I'm going to elaborate a little bit if I feel like I need to there, okay, on any one of them. Now, changing jobs, all right? If you're a nurse and you're working and you have a set salary or hourly pay, and you want to go from one hospital to another hospital in the process. You've been at your current job for 2 years or more, even if you've been there for a year, and now you're going to get paid $3 more an hour or $5 more an hour on a base pay with a different facility doing the same thing. That's actually okay. All right. You can change a job if it's in the same line of work and it's going to be a base pay or salary and you're changing because your income is increasing. That's okay. It's just the fact that if you're changing a job and you're changing industry and you're doing something totally different, unrelated to what your past 2 years has been, that's when it would become an issue. All right. So we got to make sure that's the reason. We got to check out the reason why the change may be.
And
All
I'm
right.
typing notes in the comment section, y'all, with what Tony is saying. I'm just giving like a brief synopsis. So that way you can kind of come back in read the notes about what he is saying. So just hit the comment section.
Absolutely. We're still on the first thou shalt not. Thou shalt not become self-employed or quit your job. Obviously, you don't want to quit your job. We always do a job verification call 3 days. Every lender that I've ever worked with, this is a common thing. You're going to do a verification call. So even if you've been in the process for 30 days or more and been pre-qualified, they're always going to check right before closing to make sure that you're still employed. All right. So just kind of make sure that everything, your hours, if you're hourly or what, everything pretty much stays the same. You don't want any kind of decrease of any kind as far as your income goes that got you pre-qualified in the beginning. And the self-employed piece is very important because if you're a W-2 person that's working with a company, and then all of a sudden, not all of a sudden, but you've been thinking about branching out on your own to become, have your own business doing what you've been doing for 2 years or more. When you become self-employed, you have to have 2 years of filed tax returns for being self-employed. So you have to be careful about that. If you've been a W-2 and now you're becoming self-employed, it's a total different ballgame. Now, if it were the other way around, you've been self-employed, but now you become W-2, that kind of works a little bit better because now we have a set salary that we can use to qualify you on versus the self-employed. So it could be a benefit if it goes the other way. Okay,
I got a question for that, Tony. Anjali is
absolutely.
asking, well, Takesha had a question too at the sidebar. Does
Okay.
qualification determine how much you will be approved for? It's Takesha's question.
Yes, the pre-qualification is the procedure that we use to take your income and your debt, and we come up with a debt to income ratio to see how much home you can qualify up to based on that. And different programs will require certain debt to income ratios. So I might be able to get a person approved for a certain amount on, let's say, a conventional loan with a debt to income ratio restriction. Whereas then if they want to qualify for more home, same income, same debts, I might be able to switch them to an FHA loan that allows for a higher debt to income ratio to get you approved for a little bit more home. All right. So it's not like your qualification ends at a certain amount across the board. We have different programs that we can look at to determine if you can go up a higher in qualification or not.
Awesome. And one more question. Hey, it's EJ and EJ Sales Home and Kerr the Realtor and Don Malloy on Instagram who are also listening in, Tony. Um,
Okay, wonderful.
he asked, does it matter if you're employed but you open a business? So you're remaining employed, but you say, hey, I want to open up this business. Does that matter? Or
Okay, so if you're employed and you've been employed, let's assume for 2 or more years at your current place of employment, and you have a salary or you have an hourly pay, and that's set, and you get a W-2 and everything that way. And then now you begin to be self-employed in addition to that, is what I'm assuming the question is for. Now, the key there is if a person is asking, can they use that income to qualify in addition to what they have? The question there would be is no, if it's been less than 2 years for that additional self-employed income. I would have to have 2 years of that self-employed income in addition to be able to use both incomes. But if that income is just getting started, we can't use it anyway, then I'm not really going to take it into consideration. Okay, as far as qualification goes. If that
and it kind of segue off of that a quick question for the self-employed. How do you qualify them? Because I know, like myself, I've been in the real estate business for 12 years. So for a person
Mhm.
who has been, who has been self-employed, what are the qualifications that
So
is required?
so for anyone who is self-employed, we're going to get those last 2 years of federal tax returns. I tell some people ask all the time, well, which pages do you need? I say all of them. I need all of the schedules because there may be something there. It probably a lot that I don't need, but I don't want to get you to send me certain pages that I would, need something else. So I tell everyone, send me all schedules, all pages to the federal tax returns when you're self-employed. I don't need this Georgia state returns. Anything that has the barcode or the Georgia at the top, we don't look at that. We just look at the federal returns. Now, a person self-employed, obviously, they can file many different ways. It depends on if they put everything on a Schedule C,
Mm-hmm.
or if they do an S corp, or if they do a partnership. So it all depends on how they file. So I may get just the federal. If a person does a Schedule C for their business, that's pretty simple. They're using a 1040, and then they have a Schedule C in addition to that. They wouldn't necessarily have any business returns in addition to the personal return. So I just get the last 2 years of the personal returns. However, if they have a corporation, if they have a 1120s, or business returns, then I have to get the personal and the business returns to determine the income, because that self-employed 1120 net income will also show up on the 1140, for the personal. All right. And so I look at all of that to determine. Now, the key part there is that we look at your net income for being self-employed, not your gross. So if you're getting a 1099 from your contractors or places that pay you, they'll give you a 1099 at the end of the year. You may have $100,000 of 1099 income, gross income.
Mm-hmm.
Well, it's a little earlier in the conversation here. I mentioned that we take your debt to income ratio based on your gross income. What a gross income is, if you're a W-2 or salary employee, we qualify for the gross. But unfortunately, with the self-employed, we have to take your net income, not the gross, which is a 1099. So after those expenses are tallied up, and then you have a net income on that Schedule C or your 1120s or what have you, then that's the income that we use to qualify you on your net income as a self-employed. And we get 2 years of your returns, because no year is going to be the exact same, right? And so we have to, if you earn 80,000 one year, and in 2018, and then net, I'm just assuming, let's say this is the net income, 80,000 2018, and you have 100,000 in 2019. Well, that's an average of 90,000. Okay, so we don't just take your current year and divide that by 12 months. No, we take a 2-year average of your self-employed income for qualifying.
Gotcha. Awesome. Thank you so much for that.
Absolutely. Absolutely.
On with our commandment.
I guess we only got the one so far. Okay, we got 9 more to go. But
We only have about 10 more minutes, guys.
well, and we only have 10 minutes. I'm gonna just kind of scale through. Obviously, this is some good information. I'm just excited to be able to put this out, and there'll be more to come. All right,
I'll
so
share it with them too. I'll upload it to the Facebook page and share it with them. So
absolutely
they will remember. Don't get
right.
this weekend, y'all.
Right. And if you have any segue questions afterwards, obviously you can reach out to Trish or myself directly. We're always here. Tony Brown at Synovus.com is my email address, and you can get in contact with Trish as well. So the second, but and I'll just kind of go ahead and down through because they are pretty important as far as what not to do when you're applying for a home. So thou shalt not buy a car or truck or van. All right, and I have a little parentheses. You may have to live in it. So
Hello.
so, so
Do not buy a car, truck, or listen, a boat.
a boat.
Or a boat, or
Yeah, yeah,
RV, or they
yeah.
have to live in it. Tell them again.
Yeah. That may have to be a houseboat, okay, right? Thou should not use charge cards excessively or let your accounts fall behind. Okay, some of this is self-explanatory, but I mean, we have to look at these things, on a regular basis. Don't go charge off your cards, like Trish told you earlier. Thou should not spend money you have set aside for closing. All right, so if that's money that you've been saving for closing, obviously continue to do that. Don't spend it. Thou should not omit. Right.
That has happened before. So
Right. All of this has happened before. That's the thing about
your
it.
closing
Every
money, y'all. If Tony gives you an amount, he says, I need this amount you to have in the bank, sit and wait it on me for closing. Y'all don't pinch off for that money. Those shoes, that
listen,
bag can wait, y'all.
We can laugh here all we want to, but these things are on here. Why? Because someone has done these things before. Okay, they have, and not only done them, but it has affected them from being able to qualify when they once were qualified.
Mm-hmm.
True, true. Okay. The next, thou shalt not omit debts or liabilities from your loan application. All right. So if you know you have a debt, if you know you have something that's not on the credit report, don't think that, oh, he didn't ask about that. I just opened this account. I got a $5,000 line of credit. But it didn't show up on my credit report, so I should be good, huh? No,
No.
because we actually also have an inquiry report. So if I pull a report today and you just made an inquiry earlier this week, that debt is not going to show on your credit report yet, but that inquiry does. And so that inquiry of a loan that you just took out could affect your debt to income ratio. You first of all, you can't take a loan out to use for money for closing as well. You can't do that. You can't
It's done.
borrow money to borrow money. You can't do that. All right. Um, thou shalt not buy furniture.
So
Okay,
I
wait
wanted
until
to
you
piggyback
close.
off of that too. Even when it comes to liens, if you have a lien, please tell us, because if we don't see it, if Tony doesn't see it, guess who's going to see it? The closing attorney.
Yes,
So if you
yes.
have a tax lien, a HOA lien, please,
Mm-hmm.
this process is layered, y'all. So we have checks and balances. So if he doesn't see it, the closing attorney is going to catch it, and you don't want to get to the closing table and you cannot close because you did not disclose this information.
Absolutely, absolutely. Thou shalt not originate any new inquiries into your credit. So that's applying for any new credit. You don't want to do that. Okay.
Mhm.
Um, there's on some loans, some conventional loans, there's a soft pull that's done before closing, meaning they don't pull a full credit report, but it's like an inquiry type pull. So they can see if you've applied for any new credit. And if you have, that would need to be disclosed. All right. So there again, don't apply for anything after start, your get your pre-qualification or pre don't do that. All right. Thou shalt not make any cash deposit into your bank account. Now, I tell you what, I said I was going to skim on through these, but I got to stop right here.
You do.
Okay.
And before that, Anjali had a question. If you have multiple accounts, do you have to submit 2 months for every account that you have?
No, you don't have to submit for every account you have. I pretty much just need where your funds are coming from for closing. Okay. So if you have all of your money pretty much in between one or two accounts, that's the only accounts I need to get. I don't need to get all five or six different statements or accounts that you have. Okay. All right. But
Let's talk
if
about
you're
you.
but if you're transferring money from one account into your current account, let's say you have um, 5,000 in one account and 5,000 in another account, and that gives you $10,000 total. And you're like, okay, this is where my money is for closing.
Mhm.
I just need those two accounts. But then you may have a third or fourth account that has money coming into one of these other accounts on a regular basis. Guess what? We're going to need to see those accounts as well because we need to follow the paper trail. The underwriter wants to look for any deposits that are non-payroll or transfer, any deposits or transfers
Mhm.
that are non-payroll into your account. All right. So on this bullet that I'm talking about, no cash deposits. Cash is never an option. Okay, for any source of funds. Think source of funds. Think paper trail when it comes to money coming into your account. If you can put a paper trail to it, a legitimate paper trail, then okay, we can look at it and we can use it. But cash can never be documented, so you can never deposit cash.
So tell us
So with
about
those,
gift funds, Tony. Sorry to interrupt you, but
oh
tell us
sure,
about gift funds and like how like people can transfer it. They have to verify it through a letter and just kind of how they process those, because that's the question that I get along with gift funds and kind of DPA. I wanted to say that to the end,
mm-hmm,
but just kind of how that relates, because they may have a parent that says I'm going to transfer this money into your account.
absolutely.
So tell them how they have to verify that.
Absolutely. I'll do that. And just to finish my point, if you have another account that you have money transferred into it, then even that transfer, we need to see that that money transfer from an account of yours, that constitutes your funds. All right. Because if it came from another person's account, it's not your funds, it's considered a gift. Right.
Mhm.
So just kind of be careful about that as far as any cash deposit, no cash deposits. And we are looking at those deposits that do come in there that are non payroll. So if you do have a gift coming from a family member, and even within that, it has to be a certain family member that can even be able to, not a certain person that could be even be able to give you a gift. Okay, so we'll have to look down and drill down on that if that's the case for you. But gift funds are allowed. The main thing that we have to do is verify that the person giving you the money already has the money in their account to give it to you. So we have that person has to be willing to show their most recent 30-day bank statement as well, all pages, not just the page that shows the gross, the amount they have in there, because the underwriter needs that full 30-day statement because they want to make sure that that person also has pretty much just payroll deposits into their account. If their statement shows a cash deposit of $5,000 5 days or 2 days or whatever before they're going to be giving you the money, they're not going to accept that gift, because they cannot also trace or track where that money came from. But if the money was already sitting in their account and it's just normal deposits that we can see from the payroll or whatever, then it's okay. It constitutes a valid gift donor. All right. And then how the money would get into your account, we like it to be a cashier's check written out to you to get to your account, but it can be transferred if you bank at the same bank and you want to do an online transfer, then that can be done as well. We just kind of document the movement of the money, and then we lastly come back and we get updated statements from you, the buyer, for the money that has gone into your account to show that it's in there now. We also get an updated printout from the donor to show that, yes, we saw that it was your money and you had it in your account. Now we need to see that it actually came out of your account, donor. So we need a printout from your statement as well, showing that money that came out as well. Okay. So
And
that's
so
it.
for your gift letters and your donors, just make them aware that they will. I know some people are kind of funny about, I don't want to give nobody my bank statement.
Right. I'm not on the
But I
loan. Why do I have to give myself?
right.
But
So just
right.
make
Yeah.
them
But
aware that that is one of the processes with you trying to get into your new home. Just let them know up front. My dad is that person. He's just like, I'm not giving anybody my information. But if you let them know up front the process, then it may work a little bit better for you. So that's just some
absolutely.
wisdom from.
And I'm always available, and I've done this several times to speak to the donor, okay, and let them know that a lot of times people need to know, well, why? What is the reason why? And so when I explain the why, it actually helps to people to understand. Okay, this is what it's just a procedure.
That
Okay,
is correct.
okay, okay. Two more bullets. Thou shalt not change or open a new bank account. All right. So we want the money that you have for closing to be in the account to where you have it. That has happened before, and we actually are able to get over that, but it just causes for more documentation to track and trace. All right. So we like the money to kind of stay in the account. Yeah. Okay. And lastly, thou shalt not co-sign for a loan for anyone. So you don't want to, even though it's their responsibility and you're just co-signing, guess what? Now you're co-signing, you're joint on that account. That's that you owe as well. Okay.
Please
Um,
don't y'all.
and with that being said, the only way to not count a debt against you that you already are a co-signer on is if that other person can show that they made the last 12 months consecutive payments to that account out of their own separate account that your name is not on. All right. So what does that mean? If you've been a co-signer on a car with someone else and it's only been 6 months, guess what? We have to count that whole car debt against you because it hadn't been 12 months yet. All right. It has to be a minimum of 12 consecutive payments from the other person's account showing that they made the payment and your name is not on that account to then not count that liability against you.
Woo, that is a golden nugget right there. I just typed it into the comment section for y'all. So that you keep that in mind about co-signing. It's not for the faint at heart, y'all.
Right.
Something I don't do. Honestly, but to each his own. But when you're buying a house and you want to make certain purchases, you have to take these things into consideration. about how that can affect your credit and your ability to purchase a home. Keisha has another question about joint checking accounts. She says, "What about joint checking accounts? Payroll for both are in same account." I'm gonna ask her to elaborate, Keisha, on that. She says, "Don't do it, y'all." As far as co-signing, girlfriend, I'm with you. I guess I was raised to my. I'm a military brat. I never served, but my dad was retired Navy. He was in it for 21 years, and that's one of the things that he always said. He was like, "No, do not co-sign."
Was that question about joint accounts and if the deposit is coming from another person that's not on the loan, if they actually
I'm thinking
look
that's
at
what
that?
she's asking. I asked her to elaborate because she just said, "What about joint checking accounts? Payroll for both are in same account." Okay, she said,
Yeah,
"My spouse and I have both of our checks in same account."
right. Okay. So let's say only one spouse is on the loan,
Yeah.
but two spouses have money going into the account.
Mhm.
That's okay. Um, we're going a direct deposit from an employer. It says it on there. We know that that's an employment check for the person that's on two people that's on the loan. So that's okay. The underwriters really won't really question that too much. Depending on the type of loan, if you're doing an FHA loan, then the underwriters will ask for a funds access letter. That's the other person that's not on the loan stating that the other person has full access to the funds in the account, in the joint account listed at whatever company. If I'm doing a conventional loan, it used to require that same letter as well, but now they've done away with not even needing that funds access letter if I'm doing a conventional loan. But that's it. The person just has to show that state that you have full access for the
She
money in the
said
account.
yes, so that's exactly what she was asking. And I dropped
Cool.
a few notes in the comments about what you just said. The funds access letter is something new to me because back in the day, if both of your names were on the account, it was both of y'all's money. So I'm glad, and I'm pretty sure with some rumblings and grumblings going on, the reason why they did start doing their funds access letter.
Right.
Hmm.
That's right. Okay.
Yep. So if anybody has any more questions, drop them in the comments. And Tony has access to the Facebook Live, so you can go in and see the questions as well if you guys think of something else while we're talking, because I wanted him to touch base too on down payment assistance. I know that's like a huge, huge question, especially Georgia Dream. I wanted him to talk a little bit about that. And if you have any additional questions, like I said, you can just drop them in the comments and we will get them answered.
So you want me? That's what you.
One more thing, Tony's email address is in the comments as well. So if it's something that's like a little bit more involved and you feel like you want to go directly to him, it's Tony Brown at Synovus, and I'll retype it again so that you have it. So if it's something, that's kind of involved that you need him to answer, you can always reach out and email him too. But you can take it away, Tony.
So how much time you said earlier we had about 10 minutes? How much time
We
do we have
do.
right now?
I have three on the I have 3 minutes, well, two now on the live. Instagram says I have 2 minutes, so
So I got 2 minutes. Wow.
we can make it for Facebook. You can make it five if you need to. We have
Okay, no problem. No problem.
more on.
I got you. I mean, this is just obviously a good a topic that can go an hour within itself or more but generally speaking, a lot of people are wondering if we still have down payment assistance, and the answer to that is yes. Okay, there are programs still out there available for down payment assistance. I have a loan that's not down payment assistance because it doesn't need down payment at all. It's 100% financing, so there's no down payment with no mortgage insurance. That could be another conversation that we can get application for that program. But specifically about Georgia Dream, yes, Georgia Dream is there. They have the regular Georgia Dream is 5% towards the buyer's down payment of closing costs, or 7,500 if they are a nurse or policeman, firefighter, medical professional. You can get up to 7,500. Well, now that's one program for Georgia Dream. They also have one that they're giving $15,000 for homes in certain counties. And the ones for our general area here in Atlanta are DeKalb, Fulton, Clayton, and Douglas. There's three other ones in like Bibb and Muskogee and one other county that does not are in the Atlanta area, but they're doing 15,000 for that, and that does pretty good. But they're saying that that's going to end here in like June. By the end of June, they're saying that program may be going away. For the 15,000. But I've done the loan. I'm familiar with the loan, the qualifications. You have to meet certain income qualifications for the household, credit score qualifications, debt to income restrictions, things. I would say each case, we just look at it and see what we can do. Okay, and I can assist you with that.
Awesome.
So, all
I
right.
just want you to touch base on those your 100% financing program. I just thought about
Absolutely, absolutely. And so now one thing about the Georgia Dream, out to segue into that, it takes longer to get that loan through the system and close. We need at least 45 days, if not 45 to 60 days, for closing on a Georgia Dream, which could affect your ability to win that deal. As Trish goes out, and she tells the listing agent that this buyer's doing Georgia Dream. Some listing agents don't like that. Well, I have a different loan. It's a conventional loan, not FHA. It's a conventional loan that I can still close in my normal 30-day, turn time. All right. And it minimizes the buyer's out of pocket. So it's great. All right. Um, it has certain income restrictions as well, or debt to income ratio restrictions. But I'll look at everyone to see how you look to qualify for that. But I do a lot of that loan, so it is available to you. One good thing about that loan, and we can talk about this. We didn't talk about student loans at all in this, but I mean that's another conversation. This loan for conventional allows for income driven repayment plan on student loans to be calculated. So if you have a zero payment plan requirement on the income driven repayment for student loans, I can take that into consideration versus on FHA loans or any other loan, FHA, VA, USDA. You're going to have to count 1% of the balance of your student loan as a payment. So if you have a $50,000 student loan, that's $500 in debt that I have to count on an FHA loan. All right. In addition to your other debt, that could make or break your deal on an FHA loan versus if I was doing that same buyer on this conventional loan that I have, zero payment if income driven repayment plan that can actually get you into the home versus otherwise it may not. So that's a I'll kind of leave you with that to say that there are other options.
there are other options, guys. So, and the other thing that I wanted to say about Georgia Dream is that while it is a good program, and it may be done away with by June, I also wanted to say that if you get approved, let's say with Tony, Georgia Dream is a whole different process. So they have the right to not approve you based on their requirements. And so it is possible for you to be approved with Tony and get an FHA loan, but if they do not approve you for that $15,000, then you still have to, figure out and have a plan. It's something that I tell all of my buyers up front when they're saying they want a down payment assistance, they want Georgia Dream. I'm saying plan A is the $15,000, and plan B is that you have your down payment money in the bank in the event that Georgia Green finds something that and will use it to not approve you because they do have the right. They have their own requirements that they use, and they can approve or deny you. But if they deny you, to upfront to let you know and to be in the position um, that you need to have that money in the bank, basically.
That's right.
So I
Yes.
just wanted to throw that in there. I just wanted to throw that in there. Andre asked the question: if the down payment and selling cost normally amounts the same? So I think he's saying the down payment and then the closing cost. Are they the same?
So whenever you close on a house, there are three things that are collected, three buckets of numbers, okay, that are collected. You have whatever down payment that's required for the loan.
Mm-hmm.
Then you have a set of closing costs on the loan. And then you have a set of prepaid items. Okay. So your down payment would be on an FHA loan, that's 3.5% down payment minimum. On a conventional loan, you have minimum of 3%. Person that qualifies for a 3% down conventional, we have that. We have a standardly 5% down on conventional loans. And then, of course, I have a conventional loan that's 0% down. All right. But the down payment is whatever down payment required for the program, whether you have it or not. All right. The other two items, the closing costs, your closing costs are your standard closing costs as far as your attorney fees, your intangible tax, state tax, any lender fees. Originate if there's origination fee or not in the loan, that's part of closing costs. Your appraisal, that's part of closing costs. Okay, so this closing costs, usually we use 3% of the sales price as a guide, and but I would say that probably 3% of the sales price hits maybe around 180, give or take 180,000 sales price. The higher you go up in sales price, the lower that percentage is. All right, the lower you go in sales price, the higher percentage that is, because some fees are set fees, some fees are percentages. All right, so it's not a set 3%, 2.5%, 2%, one of anything. Okay, but generally speaking, about 3%. That's why a lot of times, customarily, agents, realtors may go in and ask the seller to contribute as much as maybe 3% of the sales price towards the buyer's closing costs. Sometimes you can get that. Sometimes it's a bidding war. You may not be able to get that. Trish will be able to explain that part to you once you actually get to that point and you're actually writing your offers or what have you. But if you're able to get 3% from the sales price of the sales price from the seller, a lot of times that's covering your closing costs, and it may cover some of your prepaid items. Your prepaid items are going to be your daily interest from the day you close to the end of the month. So if you close at the 15th of the month, you're going to have 15 days of interest because you take possession on the 15th of the month. If you close on the 30th, you're only going to have 1 day of interest. So it's your daily interest from the time you start ownership. Then it's going to be your first year homeowners insurance, whatever that would be, 1,200, 1,500, 600, whatever that first year homeowners insurance is part of your prepaid items. Then you have an amount to set up your escrows for taxes and insurance. That's anywhere from 3 to 5 to 6 or 7, 8 months of escrow in advance into your escrow account. So that's why they call that prepaid items. Your prepaid items, if your closing costs are customarily 3%, let's say your prepaids are customary maybe like 1% or 1.5% of your sales price. Okay, so that'll kind of give you a general idea, as far as yeah.
Mhm.
hmm
And that's
Okay.
correct. And just to piggyback on the closing costs, all sellers don't want to pay closing costs. I'm gonna be very honest with you all. And sometimes they use that as a negotiating tool. They'll say, "Well, your offer is good, but this one is saying that I don't have to pay any closing costs." Of course, I make them verify that with me before I bring that to you. But you have some that are generous. My last two closings, one seller paid closing costs and the other one didn't.
Right.
So it just really depends on the seller. If they're in multiple offers and you have multiple offers, that is one of the negotiating tools that they use. And so when we have our initial buyer consult, I'm very upfront with my buyers. I'm giving you the worst, the best case scenario. I'm giving you the worst, and then I'm giving you the middle. Because I want to arm you with the knowledge to make an informed decision about what you need to do financially and personally for you to get into the home that you're looking for. So just keep that in mind because I know some people say, they can always get closing costs. It depends on the market. And right now, like I said, we are in a seller's market. So closing costs are used as a negotiating. So that's all I have for that, Tony. Did you have anything else that you would like to say?
Um, I'm available here. I mean, we can say a lot of different things to help you out. I'm glad we're able to answer some questions that people have. Um, I would there again say that as far as interest rates, I would touch on that. Interest rates are low. Okay, so you can still get a nice low 3%. I locked someone yesterday at 2.875 on a conventional loan.
Wow.
2.875 on a conventional loan.
I love hearing stuff like
I,
that, y'all.
okay, okay,
I wish I could get this.
literally.
That
Okay.
is awesome.
And then an FHA loan that I locked the day before was at 3%. Okay,
Wow.
so rates are low. It's still a good time. So if you wanted to know if this is a good time to buy, yes, it is. All right, there. If you qualify, if you need assistance or not as far as down payment, let's talk about it. But otherwise, it's still a good time to try to find that home that you want to purchase. And if you need to work on a couple things, I'm able to assist you with that as well. If I pull your credit report and there's some items that we need to address,
Mm.
I'll be able to let you know, hey, look at this first, second, third, so on and so forth, to get you in position, whether it's 3 months down the road, 6 months down the road, or a year. We want to be here to assist you and help you along the way. Okay.
Tony, we got a question coming in about credit score from Melissa. Hey, Melissa, thank you so much for tuning in.
Hi, Melissa. So, what it just said? What did she ask about credit score?
She's asking what was their credit score. I guess with the interest rates that you threw out, that you locked in for, what's
Mhm.
around what range is the credit score?
Oh, okay. So, interest rates are determined based on a person's credit score in your standard FHA conventional loans. So the higher the credit score, the lower the interest rate. Okay. That one in particular was a regular conventional loan. So that person's credit score was over 720. So it did allow, actually it was over 740. So it did allow for the lowest interest rate that I could provide. If the credit score is going to be lower on that same conventional loan, no, the interest rate would not have been that low. Okay,
Gotcha.
so that the credit score does help when it comes to credit qualifying. All right,
Okay.
and there are certain minimum credit scores that a person has to meet for the program. So for a regular conventional loan, 620 is the minimum credit score that I have to have. Um, for an FHA loan, 640 is the minimum credit score that I have to have. Okay. For my conventional 100% financing loan with the no mortgage insurance that I mentioned earlier, 636 is the minimum credit score for that one. All right. I will say on that particular program, unlike the other ones, my 100% loan, whether you have a 636 or you have an 836, you get the same credit score. I mean, the same interest rate. So it's a great program that for those that qualify, there's no what they call risk based pricing for the interest rate. All right. So it's a good program for that.
Okay.
Okay.
Question, Melissa. Thank you so much.
Absolutely.
And I typed in some of the scores, so if anybody wants to go back and check, and like I said, you put them in the comments. Tony and I'll be checking periodically to answer any questions that you may have.
I do want to. I wrote down a couple things of bullet points, and
Okay.
since it seems like we still have the floor here for a little bit,
Mhm.
let me touch on one thing that I've had a couple questions to come across my desk here recently. And whenever I have certain questions, I like to jot them down
Mhm.
because other people could have the same questions, right?
Yep.
So the question here is the bankruptcy timeframes needed from from a bankruptcy that had been filed. All right. So you have a bankruptcy, you either have a Chapter 13
Mhm.
where you have a payment plan back towards that, or you have a Chapter 7 where there's a total liquidation of your debt. It's a Chapter 7, right? So let's talk about on a Chapter 13 with your payment plan. The guideline is that on an FHA loan, you're eligible to purchase the home after 1 year into the Chapter 13 bankruptcy. So you may have a 4 or 5 year plan of the Chapter 13, but after you made 12 consecutive payments, you're eligible for a mortgage. But I'll be honest with you, I personally have never closed a person that's currently in a Chapter 13. There's other things that have to go on. You have to get trustee approval.
Mhm.
They have to do a lot of things on their end, and then everything on the credit report has to be matched up to the T or to the time of you trying to qualify. So other things may come into place to where it would not necessarily allow you to do it, but the guideline is that you're eligible. But once you complete that Chapter 13 plan, the moment you complete it, you make your last payment and then you get your completion paperwork for FHA, you're eligible right then. Okay. Now, for a conventional loan, you still have to have 4 years from the completion of the Chapter 13 bankruptcy. So, for a person that completes a Chapter 13, FHA is going to be the loan that you're able to do because you can actually go into a home right when you finish your plan. Okay.
Okay.
So that's a Chapter 13. All right. Chapter 7, with the Chapter 7, the shortest time frame that you're eligible to get into it, and that's your total liquidation. You just pretty much gave everything back or gave everything up. The shortest turn time is on a VA loan, 1 year. 1 year from a Chapter 7 discharge, you're eligible for financing. For FHA, it's 2 years. So 2 years from that discharge date, you're eligible for financing on the FHA loan. For conventional, it's 4 years. Okay, you need 4 years from the end of that chapter 7 bankruptcy. So the ones that you usually do a lot of, that I do a lot of as far as bankruptcy goes, is an FHA at 2 years from the discharge. I've done a couple of VAs after 1 year, but the majority of the chapters, the bankruptcy people that file bankruptcy and they're able to qualify and get into a loan, it's been me doing an FHA loan after 2 years. Now, if there was a mortgage included in the bankruptcy of the Chapter 7, prior mortgage is actually 3 years. 3 years from the end of the Chapter 7 bankruptcy, if there was a mortgage involved. But if you've never owned a home before, you filed a bankruptcy, generally speaking, 2 years after that discharge. Not the filing date, the discharge date. That filing date is usually about 4 months difference between filing and discharge. So we go off of the discharge date. So I just want to put that in there because that seems to be a question that has come up, quite often as far as
It
time
does
frames from bankruptcy.
much for addressing that.
Okay.
Mm.
You never know who, hey, things have happened, but hey, things have happened, but you can still come out of those things and be, and move right along. Okay.
Absolutely. I encourage you.
Absolutely.
I encourage you. And I typed in the notes, everybody, we're in the comment section, the notes from the bankruptcy piece. So, like I said, you have additional information. And like I said, if it's something a little bit more personal that you don't want to put in the comment section, I am typing Tony's email address again. If you need to get in contact with me, my information is scrolling at the bottom of the screen. So you're able to see that. You can get in touch with either one of us. And if I don't have the answer to your question, I'm sure Tony does. I text them all, like, hey, what about this? What about this? With the stuff you
Absolutely.
guys throw out at me. So he is definitely a great resource. And like I said, just overall, just is, a phenomenal law officer, y'all.
Thank you, thank you, thank you, thank you, thank you. Child support. That's another thing I wrote down here. You can use child support to help you qualify if you're receiving child support. Now, what we need for child support is if you either have a court order for that child support, we need that, or a divorce decree. It needs to be spelled out in there.
Mhm.
And then if you have a court order or divorce decree, we need to see that you've been receiving that amount that's listed there, at least the minimum of that amount, for the last 3 months. You need to show a document receiving it for 3 months. So if you're receiving it, but you're getting cash, there again goes back to the thou shalt nots. Okay,
Mhm.
same thing with cash. You cannot track cash. So if you're getting child support and it's coming by way of a cash or some other way that we can't document, even though it says it in the divorce decree or the court order that you're to receive it, if we can't prove that you've been receiving it for the last 3 months, we won't be able to use it. So we need to show proof that you've been receiving that child support for at least 3 months. Now, if you don't have a child support or court order, but you have been consistently receiving it by way of a check or some other form, we need 12 months consecutively you receiving that amount to be able to count it. Because now we can document by way of your bank statement that you've been receiving this amount for this period of time, but you never went into a formal agreement because everybody was cool. Everybody understood, no problem. Well, we can use it if we can show it for a 12-month period. That's another thing. Okay.
Angelique was asking for the link to complete the loan application. Um, so I'm going to text you her email address.
Okay, that sounds good. That sounds good. But it is www.synovus SYNOV as in Victor US.com /Tony Brown. Synovus.com /Tony Brown.
And I'm typing that in the comment section, y'all. I hope I did the right spell.
And if anybody wants to meet me to look at their scenario, to see how they look, to get a snapshot, to get started, there's no cost to do that.
No
A lot of people think, a lot of people think, well, what do I owe you to look at my scenario? Nothing. Okay, just I can take a look at it and pull your report, let you know what your scores are, let you know what everything is that way, and we have a discussion. That way, you have a footprint of what it takes.
Yes, and he's very true to that when he says no papa. And we have consumers that contact us daily. And that's the thing that we want to know, are you ready? Are you prepared? Because, some people may, say that they know and then others may not. And so, like I said, we put you in a position to arm you with the information that's needed to make an informed decision. So part of that is perhaps completing that loan application to see where you are and develop a plan. We do it all the time. All the
Yes.
and Tony will give you a month that you should be ready. He'll give you your items that you need to check off on to make sure that you're ready. And so, like I said, we're here as your real estate resource. So feel free to reach out to us. Tony, I put the loan application um, in the comment section. His email address is in there. My information is scrolling at the bottom of the screen. We are here for you and to assist you. We wanted to do this virtually as we are still, you know, we are still doing our shelter in place and we're staying home and trying to social distance and stay as safe and healthy as possible. So we are making all of this available to you, virtually. You don't have to get up and go anywhere. You just scan your documents, take a picture of it, email it to them, so that way, you basically have everything that you need at your fingertips. So, use that information. If you have any questions for me, have any questions for him, reach out to us. We're more than happy to help. That's why we took time, to really just sit down. I get a lot of questions. I mean, they're coming from Instagram, they're coming from Twitter, they're coming from Neighborhood News Report. All of those outlets with people just kind of saying, okay, where are we? And so we just wanted to provide a platform for you to get all your questions answered. And like I said, if you think of anything, post it in the comments, email us, text us, and just let us know what you're thinking. So that way we can help you and get you ready to purchase a home. For my sellers, I wanted you all on this live too because, we do understand the process it takes for you to put your home on the market and that you do want a quality buyer. And so that's one of the reasons why I wanted Tony to spell out how he does his conditional approvals because when we see that, and that is a difference between the pre, like you said, it means prior. So pre-qualification and pre-approval means before. But once they get to the point of conditional approval, you know that you have a valuable offer and a strong loan that will close. So I just wanted to, kind of rest assured and let you know that when you do put your home on the market, you have any questions about it. The buyer portion, I definitely have you on. You don't have to worry about that. But if you've been on the fence and just want to talk it through, I'm more than happy to speak with you about that. Melissa had a question. Tell me, does it hurt your credit score for you to take a look?
For you to do what?
For you to take a look, like if they complete the loan application, she's asking, does it hurt your credit
Okay.
score?
Now, I'll say this as far as credit scores go, and this is another thing that people don't necessarily realize, and I have a conversation all the time.
Mm-hmm.
Credit scoring is not the same across the board.
It is not.
So it depends. They use different modules for the credit scoring depending on who's pulling it. So if I pull your report, that's a lender pull and a module that's used there. If a car company, auto company pulls it, they use a different module for that.
They do.
If you pull it or a consumer like Credit Karma or something like that, that's a consumer pull. That's a yet a different module. So you can have me pull a report, auto company, you apply for a car, and then you pull your Credit Karma all in the same day. And guess what? You're going to get three different scores. All right. So let's understand first of all when it comes to if me pulling your report has any bearing or effect. It's not that if I pull it and it's lower or higher than your Credit Karma, it's just different. So it's not like it's lowering it or anything of that nature. Okay. So my answer to that would be no. It's not going to affect you as far as your credit scoring. It's only going to help you know what your lending score or your lending credit looks like in reference to qualifying for a house. And if a lender hasn't done that, then any other scoring system or module that you're using is not giving you the true aspect of what it's going to take for you to buy a house. You need to actually get that lending score, and wherever it may be. Okay, just don't pay attention too much to what it is as far as compared to others, because there's no comparison. They're just different. Okay,
Right.
so
Melissa
all right,
says thanks.
my pleasure.
Well, I am gonna we're gonna jump on off so that we can continue our daily duties. Um,
That's right.
Tony, thank you so much for taking time out of your schedule to come on the Facebook Live with me and just kind of answer questions today about the market, the real estate market. Thank you so much for just being such a viable entity to the Trish Sales Atlanta family. Um,
Absolutely.
appreciate you. And just to my Trish Sales ATL family, thank you so much for your support. Thank you so much for tagging, liking, sharing. Because I always say that I'm a servant leader first. And so my whole and the reason why I've been in the business for 12 years is that, every closing is different and every time someone sells or purchases a home, it is just it's like a feeling I can't even explain. And it's no different than when I started in the business. So with that being said, I feel like walking in my purpose and doing what it is that I'm supposed to do. So, if anybody has any additional questions, if you need to, Melissa said this is great. Thank you so much, Melissa. If you need to contact us, Tony Brown at Synovus.com. It's in the comment section. I also posted the link to the loan application. Thanks so much to Anna Lemons for tuning in. And if anybody needs to contact me, you can call or text me at 404-819-4495, 404-819-4495. If you want to just browse some homes and take a look at what's currently on the market, you can also visit my website at www.trish-atl.com. And that is TRISHSELLS.com. And be sure to follow us on our social media. Tony Brown is on Instagram. His handle is at Call Tony Brown, so CALL Tony Brown. And all of my social media handles are at Trish Sales ATL. Thank you so much for tuning in. You
Thank
all
you.
have
Thank you
a
all.
wonderful Friday. It's beautiful in Atlanta. So if you're not pleased
Yes.
to go out, please wear your mask, practice social distancing, and shelter at home as much as possible on our day 42 of our quarantine. Have a
All
great
right.
day. Bye bye.
Bye bye.